5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey y'all, thanks for watching. This is Andrew from the Options Millionaire community. If you're new to the channel, go ahead and hit that like button, subscribe so you can get notifications for all future content and our Monday, Wednesday, Friday live streams. Whether you are new to this channel or been here for a while, you will find out or already know that I am a price analysis trader, more specifically a volume price analysis trader. What does that mean? That means that the bulk of my decision making for entering or exiting a trade is determinant on price action relative to the volume that we see on the charts. Today we're going to be going over exactly what that means, diving into the specifics and giving you a couple of resources on how you can learn how to trade based on volume price analysis. Let's get started. In order to be successful as a trader, one has to find consistency. In order to create consistency, you have to develop a system that's both repeatable and reliable. One of the mistakes that amateur traders or beginner traders make is that they rely solely on technical indicators as their system. One, because it's easy. That's the low-hanging fruit. Anytime someone enters the trading market, they see all these fancy indicators, and that is what they develop their system on because it doesn't require too much in-depth work or knowledge or research. They just put on a couple indicators, and then that's where they learn, and there you go. Technical indicators are great, don't get me wrong, but they are not intended to be the foundation or the bedrock of a system. They will lead you wrong about 40 to 50% of the time, which is not reliable or consistent enough in my opinion. In order to develop consistency, you need to rely on the market itself. What does that mean? Well, firstly, I break all my decision making down into 3 items in order of importance. The first one is market awareness, the market itself, me monitoring my watch list, monitoring the sectors, monitoring news, monitoring data. Everything about the market or that what moves the market is what I monitor, in my opinion, is the most important aspect to know. Number 2 is analysis or volume price analysis, which is what we're going to be talking about today. And number 3 will be indicators. My personal favorite indicator are my SR levels. My proprietary levels that I post every morning will be the most important one. And then after that would be any other kind of indicators that you add to the charts. And that, of course, is the third and last one, only after market awareness and volume price analysis. Today, we're going to dive into, obviously, the volume price analysis. What is volume price analysis? Volume price analysis is the analysis of the price action or the candles that you see here relative to the volume on the same time frame. Now, the key word there is time frame because I am a huge proponent of time frame continuity. What does that mean? That means adjusting your time frame from the 3-minute to the 5-minute to the 15-minute to the 30-minute and so on and so forth, all the way up to the even 60-minute, all the way up to the daily charts. If you don't already do this, I highly encourage you when doing any analysis of any kind to make sure you're doing that same analysis across many different time frames because that'll help you develop trend and true directionality of the market, because simply doing anything on the 1-minute or 3-minute chart is not enough to provide the overall insight of the market. The analysis that you do on a 3-minute will be greatly different than what you do on the daily chart. It will provide a lot more overall insight and trend direction of the market. So when I am monitoring price action for a potential entry, assuming that I've already done my analysis and research on the market awareness part of things, I'm now refined to the second tenet of my strategy, which is entering based on volume price analysis. There are 3 parts of volume price analysis that I look for in an entry. And that 3-part list is first, price action, second, volume associated with price action, and third, the follow-on or continuation candle. What does that mean? Well, firstly, when I am looking for a prospective move, let's use this little bullish run for example. When I am looking for a call entry here to the north, I'm looking for a bullish candle. That's not a bullish candle. I would probably somewhere start looking for potential entry in this area. Now, there are a couple of different aspects that I'd be looking for here, but I'm just going to go over these 3 tenets first. So the bullish move here, I'm looking for an entry here. First, I'm looking for a bullish candle would be initiated probably about right here. So once I see my first bullish price action candle, which this long lower shadow here and then a nice little thick bullish candle there, I'm looking nextly for the volume associated with this candle. So then I come right on down here to this volume indicator and I'm looking for an uptick in volume pressure because that is going to show me that the buyers are stepping in and they're going to move this to the upside. Now, one caveat here, in a low volume choppy environment like we've had pretty much throughout summer of 2022, which has not been choppy, but it has been low volume, the bulls tend to win out in a low volume environment. So it's all relative, remember. When I'm doing any kind of volume analysis, the volume is relative to the prior session and the current day. So there's not necessarily a particular number I'm looking for in terms of the quantity of volume. It's the amount of volume relative to the prior session, to the current week, and to the current conditions that we are in. So remember that. So when I see the price action move up like this on a volume candle and we take out some prior resistance levels here like this one here, I'm looking for an influx of volume. So we do have this. We do have this candle, so we do have an increase in buyers volume that tells me that the buyers are stepping in to break this. But then what I'm looking for here is a nice influx of buy volume here and the follow-on price action candle. That's the third tenet, is the follow-on or continuation candle. What does that mean? Is that when I'm looking for a move here, I see the price action, I see the influx of buy volume, and then I see the follow-on candle take out the high of the prior candle, which tells me a bullish move is in the works, and I want to be a part of that move. Now, obviously, there are other aspects of analysis that I'm looking at here, but this is the meat and potatoes of it. I would enter the trade, and then I would look for a breakdown of price action, breakdown of volume, and the breakdown of the follow-on candle or one of the failure candles that tells me to get out. Obviously, this run would have been very profitable because we never really had any kind of indication of price action to tell us to get out. This one, candle here, I would have had my finger on the trigger to sell the position, but we recovered quickly. Always wait for the follow-on candle to get out. We still had no seller's volume really kick in here, and then we keep on going up here until we hit a consolidation phase. And you could see the shift. If you're looking at the volume analysis, you could see the shift in sentiment of the market between predominantly bullish, you see mostly green, and then we enter consolidation phase mostly red, or a lot more red as we enter the consolidation phase. And then once the big sellers volume kick in, we drop a little bit, consolidate, and then the buyers kick back in right here, and up we go. Now we're breaking this down in a very elementary move right now because this is obviously a beginner's video for volume price analysis, but this is a great indication of monitoring entries based on the volume, price action, and then the commensurate move for that. Now let's take a look at what happens when something fails. This would be a great indication here. Now this would be taken at this is an opening bell move. So if you were to take the opening call here, where we get the obvious big volume jump that we usually have in the market open, big spike in buy volume, and then the nice bull candle here, we came up. And if you are in this trade right here, this candle would be a little sketch because one, we have that top wick candle right here, that top wicks, that candle comes down. You've got this volume candle, which comes off a little bit, and then we have the follow-on candle, which if you're holding calls, I'd be looking for an exit on this one. Top wick, we have a large red candle with the selling volume come in, and then we fail to the downside all the way down. And then if you see, the volume here is predominantly red. So once I exited my call there, based on this top wick and the follow-on big top wick here, long upper shadow, if you were looking for another call entry after exiting, it would not be somewhere you would find anywhere here because one, predominantly sell volume, which is in seller's environment until otherwise indicated, and then a lot of hammer candles and a lot of red that keeps on flushing down to lower lows, which is not a bullish environment. Obviously, it would be a bearish environment. This is also a great indication right here. Obviously, right here, we're on a very bullish run. We had some bullish action all the way up. We continue to have a buyer's environment with buyer's volume with huge spikes in buy volume. And then, of course, we fail and sell off. Now, obviously, you can't predict the sell-off here, but you can see the shift. So if you were to hold a call here and you see these little bitty red candles come in, it doesn't look all that bad. But volume kicks up here on the seller side, which makes me a little hairy. And I would have a point that I would not cross with holding calls that I would exit. Now, that would be based on what I see here, plus a number of other things. Obviously, I'm monitoring all the top holdings of the S&P to tell me that maybe it's time to get out here. But based on price action here, obviously 1, 2, 3, 4 red candles in a row, I would probably be looking for an exit nearly the fourth candle, especially on the uptick of this sell volume right here as we broke down below these lows of these swing positions. Now, obviously, hindsight is 20/20. Obviously, we wouldn't be able to predict this big move, but doing this kind of analysis and getting out and taking the safe exit of exiting when sellers start to creep in will keep you from being caught up in this big drop if you're holding calls. Doing this kind of analysis and taking the responsible exits when you see an influx of sell volume and selling price action, it'll allow you to get out of calls to avoid these type of reversals, or it'll allow you to get into puts right before these type of moves down to the downside to make you very profitable. And that's the whole point of volume price analysis, is learning to read the price action and the volume is the actual market itself. It's not indicators. It's not a lagging indicator. It's not some sort of line drawn on the chart. It's not a formula. It's straight up market data. It's what the market is actually doing. And the better and more proficient you are at reading what the market is doing will allow you to get an earlier entry or an exit for a position that's breaking down against you. Now I want to take a look at the same day here across different time frames to show you how the charts manipulate and change based on time frame continuity. So we were looking at this on the 3-minute chart. Now what I'm going to do is switch over to the 5-minute chart, and you see the trends really start to poke out here because you're bringing in a 5-minute instead of a 3-minute time frame, and you see the candles on the volume indicator become a lot more clear. We definitely have spikes here in the bullish volume and then the bearish volume as things break down, which shows a clear direction here on what the market wants to do. And the more time you build in, for example, the 15-minute, you can more clearly see these trend changes right here. These are 15-minute candles. Definitely you see the volume. And then even going over to the 30-minute chart right here, it really starts to amplify what the market wants to do. And you see the opening volume, the lull in the volume in the midday, and then the increase in volume going to the end of the day. And on the side note, this is precisely why people avoid trading the middle of the day, because of this right here. The volume completely exits the market in the middle of the day. And that's why people only trade the morning and only trade the afternoon, because of that right there. But I digress. The 30-minute chart here, this is one of my favorite to do the high level view while I'm trading during the day, because it gives me the straight up trends of the day, and trading in the direction of the trend usually works out in your benefit. What I normally do is after I enter a trade, usually I enter my trades on the 3-minute chart. Usually after I enter a trade, I will switch to the 5-minute to calculate my exits, because the exits on the 5-minute chart will allow me to be a little bit more patient and to really see what the market's doing and not get chopped up on little bitty, or not get enticed into exiting a position based on one little red candle. I want to exit on this type of action, not on these little red candles if I'm going to call. So get in the habit of, when you're doing this type of analysis with price action, volume, and the follow-on, get in the habit of trading out different time frames on the 15-minute, 30 minutes, even the 60-minute, to develop exactly what the price action wants to do and what the trend is pointing towards. All right, so to recap here, what are we looking for? The first one's going to be the price action. The second one, volume associated with the price action. And third is the follow-on candle. That is going to provide you with the highest confidence entry for a trade. If you only have 2 of those 3, a little less confidence. And if you only have 1 of those 3, you need to be on high alert for a potential reversal, or take your profits quickly, because that's not a high confidence trade. If I have all 3 of those things, I'm going to be a little bit more confident. I'm going to be willing to hold the position a little bit longer. So if I'm looking for an entry, boom, I want to see the candles I want to see. 2, then once I see that, I come down, I look at the volume. Do I have the volume I want? Yes or no? 3, after that, I'm looking to see how the market's going to react to that by closing the candle and starting the new candle. If I see everything, all those 3 in the direction that I want to see, I'm looking for an entry quickly. If I only see 2 of those things, again, I'm going to be a little more cautious. If I see 1 of those things, that's a high risk, low confident trade, and then I want to be on guard for that trade. So always, you move your eyes here, and then back, and then you will set yourself up for success in the long term. So that's it for this video. Be on the lookout for part 2, which is going to be analyzing each individual candles, coming out here in the next week or so. If you have any more questions, or if something in this video wasn't completely clear, please DM me in the Discord server. Well, I'll be happy to answer questions to clarify things. Or if you have any questions, post them down in the description of this video so all can learn from your question as well. If you haven't already, hit that like and subscribe button so you get notifications for all future content, and our Monday, Wednesday, Friday live streams, where we take some time out every day to do some live options trading, futures trading, and sometimes we'll throw down on some credit spreads. Thanks for taking the time to watch this video. Again, I'm Andrew from the Options Millionaire Community. Until next time, I'm out. See ya.